Good afternoon, everyone. Thank you very much for joining this webinar with OurCrowd. It's a pleasure to bring it to you. On the screen here, I've got Dan and Yoav, both from OurCrowd in Sydney, and they'll be taking us through a presentation over the course of which you can ask some questions in the Ask Question feature or function, which is down at the bottom of your screens. I'll pick them up and make sure that they're asked. So feel free to do that over the course of the presentation. Then sort of at the back end of it, we'll just work through those questions and hopefully have a good discussion about the OurCrowd opportunity. It's certainly something here at Snowball Effect that we're delighted to be able to bring you. It's a bit different from our usual offerings, which is obviously direct investments into company. This is obviously a fund, and it's got some, I think, quite different and unique features to it to enable Kiwi investors to get exposure to more of a global market. So we'll aim to run the presentation for about 25 minutes, something like that, and then we'll step into that Q&A. For people that are watching this live, you can come back to it later on and just see the recording and skip through to where you had to drop off. And for people that are watching the recording, you can also just pick up some of the questions that you'll see and skip through to where those questions are answered. So if you've got particular things that you want to find out more about, you can do that pretty easily. But anyway, on that note, I will pass over to Dan and Yoav from OurCrowd. Over to you guys.
Thanks very much, Simeon. Great to be here. Good morning, New Zealand. Good afternoon, New Zealand. Really great to be partnering this morning on this call, and really looking forward to building a deeper partnership with Snowball and Simeon. Really, there's a lot of collaboration opportunities here. We quite like-minded in the way we want to attack things from a VC and private markets point of view. So looking forward to seeing what we can build together. I guess for today, it's an opportunity just to share a little bit more about OurCrowd's background, who we are, where have we come from, a little bit more about the opportunity itself, the OC 50 fund, and also just to have a good chat about venture, what's happening in technology markets, why we think private markets are a really important component of any investor's overall portfolio. And have some good Q&A at the end and get to know each other a little bit. So I'll use a bit of a slide deck to allow us to sort of move through things in an orderly way. Hoping that that's now popped up for you. So I'll sort of launch straight in. So why is technology important? We still communicate, in my life through friends and clients, where there might be large property investors or investors with a core traditional business that will say, well, what's all this technology story? Do I really need to worry about it? I've done pretty well focusing on other things. But what we've seen is a seismic shift in a very short amount of time, which to some extent will, not allow people, I don't think, to take that view and ignore, technology as an investment class. So not even 20 years ago, if you looked at the top 10 publicly traded companies globally by market cap, only 2 were technology companies. You add banks, petroleum, healthcare, within the mix. We fast forward to, the paradigm today we're facing, and it's 9 of 10 are technology companies. Only 1 out of the 10 is not Berkshire Hathaway, which a little bit perversely, probably about 50% of its holdings are in technology related investments. So, for us, when we think about why is this investment class important, we think about it in a couple of ways. And, focus for us, number one is, technology tick, really need to be focused and investing in technology. The next aspect we think about is, public versus sort of private markets. So I know this is a little bit of a complicated slide for a Monday, and I promise it's the most populated for us to digest. But what it's showing us is blue represents the value created, or the IPO, pricing and value created pre-IPO. and green represents the value created once an IPO happens and the stock is publicly traded. So if you have a look in the 80s and 90s, all the way up to really Google's IPO, Google is kind of a bit of a turning point. But what we see is, if you had a great stockbroker that was able to get you access into leading tech IPOs, Apple came on at 1.2 billion, Microsoft at 800 million, Oracle at 300 million, you were pretty happy with a 2,190, in Amazon's case, a 3,771 times return. No problem at all. Why do I need to care about private markets? I've done extremely well investing at IPO and holding. I think what we're seeing is that complete, that way of approaching fundraising and capital markets completely shift. We're seeing, as members of Snowball, you're seeing private market investing happening in way later rounds and for way larger licks of capital. So companies are staying private later for various reasons, which we could have a fun session on separately. But what we're seeing is, as a result of those companies staying private much later, Uber IPOing at 75 billion, Facebook at over 80 billion, you're seeing the lion's share of returns captured by those private investors. The public investors do fine. I mean, there's nothing wrong, with 10x on Facebook. You'd be a pretty happy investor. But I'd much prefer the 3,000 plus times return on Facebook if you go to the right hand side apex of that graph, right? So for us. First slide, is technology important? Tick. Next slide is, private markets. You've got to have private markets as a component of your investment, because if you're waiting just for IPOs, you might do well, but you're going to miss out on a lot of the returns. And really, to some extent, this is what OurCrowd has been advocating for almost a decade since our establishment. And to hear Jay Clayton, SEC chairman, essentially speaking about private markets the way we've been talking about private markets, our platform, and absolutely, Snowballs as well, has been focused on this democratization of venture capital. The statement here that today, in many measures, private markets outpace public markets. We're seeing huge transactions materializing in private markets. Even in Australia, we've seen a 20x growth in about 7 years in the annual investment in VC. My understanding, of New Zealand is the same sort of uplift, of tremendous uplift. So this is really goes to the core of why we exist. And it's not just our platforms that are saying that this is an investment class that all investors should be very carefully considering, but it's also some of the smartest investors in the world. So Yale Endowment Fund is really the blue ribbon lead philosophy around how to allocate, from a portfolio point of view in an overall investment portfolio. They really have the majority of endowment funds looking to them for leadership. Some of the best returns, absolute returns, you'll see going around. And if you have a look at their growth or change from 2014 to 2021, you're seeing, a 50-60% greater than increase in 7 years in their allocation to venture capital. You're seeing real estate becoming a less focused part of their portfolio. Interestingly, you're seeing, natural resources moving, which, probably might be a bit different in our part of the world, but, we're seeing some really interesting trends. But for sure, VC is becoming a, paramount part of anyone's portfolio. So for us, that is really, our mission statement. How do we take that knowledge and help our clients access an investment class, which really, until 10 years ago, was utterly a closed boys club, no access, broadly to investors, unless you were lucky and incidentally found your son's best friend involved in a startup that you could get access to, which is not an institutionalized way of investing in the asset class. So OurCrowd really looked about 10 years ago at the market and said, how do we get ourselves into the leading deals globally? How do we provide that access in a democratized, fairer way to our investors? And how do we do it with a check size which is a heck of a lot more friendly than the leading US, VC funds which are investing in those deals, but requiring 10, 20, 30, 50 million US dollars minimum ticket to invest in those leading Sequoia, Andreessen Horowitz, Battery Ventures, etc., their funds. And that's if you can get access at all, because they're extremely, extremely high, highly competitive to get access into. So the OurCrowd business, for those who aren't sort of familiar, we've got a number of global partnerships which may have put us on the map for a number of you, including a partnership into New Zealand, where we're working very closely with BNZ, now working closely with Simeon and Snowball. But over the course, we've just hit about $2.1 billion that we've raised. We've reviewed tens of thousands of companies, invested in about 240. We've provided access for our clients, not just to invest in individual companies, but access to passive managed funds on their behalf. Not all families, and ultra high net wealth are looking, for a discretionary portfolio. So we wanted to help them with that. Of those portfolio companies, we've now had 46 successful exits. We're very proud of that over the run. We think that's a great track record compared to our peers, both globally, but particularly in our part of the world, where there's lots of unrealized return, but not so much realized return. And people want to see that recycling of capital. We've got 70,000 global investors. And as you can see in the graph on the left, lots of happy employees. We're about 140 people globally. The chap in pink, some of you may have met on our travels to New Zealand. His name's John Medved, our CEO, one of the most highly credentialed VC investors in the world. And you'll see we are truly global. On the right-hand side, you'll see offices, 3 in the US, Canada, Brazil, 3 in Israel, London, Europe, Singapore, Hong Kong, Sydney, and we've just opened up in the UAE and Japan. So just to give you a flavor, diversification for us is utterly fundamental. It's something that cannot be ignored. We don't think that investing in a single asset class in venture is a wise move. So we've built a platform that will help our clients access a broad range of investment classes. But the one thematic consistently is deep tech. So, we're not investors in, dog walking apps or dating apps, despite the fact that there's some great returns in dating apps for those that have been watching the meteoric rise of Bumble and the IPO. But it's not really our shtick. We're much more focused on deep tech, cyber, healthcare, consumer hardware and software, drones, driverless cars, artificial intelligence, semiconductors and chips. Those sorts of businesses that we think a lot of intellectual property protection can be built and a moat around the company is available. This slide shows our exits. Some of those might be names you're familiar with, but we'll come back to the exits in a minute. Some very high profile companies. I'll share a few of our exits shortly, but diversification, of course, is your friend. So, how does OurCrowd really work as a platform? So our business has 20 investment professionals focusing on deal flow and deal flow only. We are out hunting globally for what we see as huge propositions that can deliver at least 10x for investors. Otherwise, generally we're not building that into our platform or funds. We've invested in, we review about 250 to 200 companies each month, about 2,500 to 3,000 a year. And of those transactions we look at, we'll, take a very close look at, 300, 400 a year, and we'll end up investing in 20 to 30 a year. So, from the 3,000, we get to about 20 annually. So we're a pretty tough crowd. And then we, leverage our team to run all the due diligence on behalf of clients. And then at the back end of that, we provide full transparency on those individual companies. We invest in each company and fund ourselves. So 5% of OurCrowd's own balance sheet capital invests in the company. And then we provide access to our network to invest alongside into those opportunities, both, to individual deals and funds. But I'm going to really excavate into what our fund business looks like, because that's what we're here to talk about. Where our deal flows come, just like for Simeon, it's all about hunting for the best deals. The best founders and best companies are running beauty parades and picking which funds and fund managers they want to be working with, where they think they're going to be able to acquire the best value from their investor. So you're really having to prove to the founder why you're going to be a good citizen, add value, and help the business. And that's where we think we can add a huge amount to our founders, because we've got over a dozen offices globally, because we've got networks in each of those geographies that are high quality institutional family office relationships that mean we can access their next customer for them. We can access that geography for them. We're able to elbow our way into leading global deals alongside the best investors in the world. A little bit of a chronology of the investment cycle. So, selecting, investing, working very hard to grow companies, working with our internal team to identify exit opportunities to maximize value. So our business development function, which has about 24 individuals working within our business, is highly focused on building those networks, building out additional value in the companies, sitting on boards, and helping to drive exits with a lot of our own internal capabilities, ex-investment bankers, of course, lots of VC practitioners that can add a lot of value. We're all about alignment. We want to have skin in the game by investing, our own capital. We want to have equal terms. So everyone, ourselves, our clients, and our co-investors all on the same deal terms, all about success fees and, working hard once we close. So what we're really here, to discuss is the OC50 opportunity. For those that haven't had a chance to review the materials, unsurprisingly, OC50 stands for OurCrowd, 50 being 50 companies. Why we think that's a really interesting strategy is that you get diversification in 3 ways. So way number 1 is through different sectors. So what I've shared here is the way our first series of OC50 works. So, they're closed-ended funds. We raise capital, close the fund, and then move on to raising and closing series 2, series 3, etc. So series 1 is a touch under 4 years old. And by way of example, I'll show the way it's sort of played out. So in terms of diversification, you can see a really lovely wagon wheel of different investment classes. So you're getting cyber, cannabis, driverless cars, chips. Food tech is a very strong sector for us, very hot, strong thematic globally now. So you get a little bit of each. Importantly, you get diversification by stage. So for us, it's important not just to be invested in early stage, which, series A and B, which will give you a very significant uplift on success, but we like commingling some later stage series D, E, and pre-IPO rounds, which may not deliver a 20x return, but will deliver a recycling of capital in a shorter time, which I'll touch on again in a minute. And then diversification by geography. So we are very much US, Israel focused. We think the best deep tech in the world at scale is coming from those geographies, but it doesn't mean we won't invest in Australia or New Zealand or Asia or other parts of the world where we think great tech is materializing from. So with that strategy, in under 4 years, we've already delivered 6 company exits. 2 more companies have announced SPACs. For those less familiar, that's this special purpose acquisition company, real wave that's happening in the US predominantly around cash boxes, acquiring tech companies. Investment banks, VCs are executing these transactions. They've seen about 70-80 billion US dollars of these transactions in 2020 and almost the same figure again alone in Q1. So it's a real growth trajectory for those sorts of transactions. It's not entirely dissimilar to a reverse takeover on the Aussie or New Zealand exchanges. So we've seen 6 exits, but really we've got 2 more to come. One of those looks like an 8.2x return, which will probably take, our 6 company exits to 8 exits with a gross return closer to 3x, which we're very happy with. 30 companies have been written up, since 7 have been written down, hence, portfolio management important. And, in a zero interest rate environment, we're very happy with, what will be over a 20%, well over a 20% gross return once those exits close in the next couple of months, and the net IRR being in the mid-teens once that closes. So that's been a good journey for us. For those that like a bit more technical detail, DPI is really a very important metric or signal on how a VC fund is tracking. So what we did was we took the top quartile US VC fund, so the top 25% of funds in each year vintage. Top 25% fund generally will deliver around a high teen net IRR, which I'm sure most investors would be very happy with. So for 2017, the DPI meaning how much of your original capital that you invested have you returned or received back from the fund manager? The average for that cohort in the 2017 vintage is about a 7% return. So 7% of your original money back. OC50's already delivered a 23% return. And with these 2 new exits that are coming, we're probably going to be closer to about a 33% of your money back. So even though we're a 2017 vintage fund, we are playing more like the return of a 2015 vintage fund. So we're delivering a good return and way ahead of schedule. So we think that this strategy is highly credible, and it's really been a very, very well supported strategy with all of our institutional investors we work with globally. So we work with about a dozen leading global banks, including NAB in Australia, BNZ in New Zealand, along with, Orix in Japan, Stifel in the US, UOB in Singapore, KEB Hunter in Korea, CITIC in China. These are all, top, often the largest, but at least sort of top 3 banks in their categories, in their geographies. So, very proud of this product and its institutional-like returns it's delivering. So I'll just now touch on a few of the company exits that we had out of that fund, and then leave plenty of time for Q&A. A few of you might have heard of Uber. So Uber was a great exit out of that OC50 fund, Series 1. Very proud of being part of that journey, having a great kick as a result of the Biden administration. So great return there. A lot of you may have tried the Beyond Meat burger. It's totally vegan, so it looks, smells, tastes like beef burgers, but it's completely vegan, plant-based pea protein burgers. Really excited to be on that journey. It popped as the most significant IPO in 2019. We were very excited to be part of that journey, alongside Bill Gates, Kleiner Perkins, one of the largest tech investors in the world, and really great returns for our clients there. And then I'll give you a bit of a feel for some of the category returns. You may also be familiar with Lemonade, which was an exit in the US alongside Sequoia and some other major VCs. Sequoia really is the blue ribbon VC fund globally, returning about 50% IRRs over the last 30, 40 years, believe it or not. Their growth fund is absolutely, gold medal winning, but getting access to that fund, good luck. So we've invested alongside Sequoia about 5 or 6 times. So the whole, mission of our platform is getting into those super high quality, high profile deals for our clients, into those that they would otherwise never be able to get into because the funds that would grant them access are nigh inaccessible. Lemonade, so Beyond Meat was the IPO of 2019. Lemonade was really viewed as the IPO of 2020. Went in at an $11 value when we invested. We exited at 122. Very happy with that. Lemonade is a high-end, high-growth insure-tech play. Went from 0 to $50 million ARR in under 18 months. It's a hell of a story. BioCatch is a really interesting investment in OC50 Fund 1. BioCatch just raised a heap of money from Bain. They've got a number of global banks as investors, including NAB, whom I introduced. What BioCatch do, which is really cool, is they provide biometric behavioral profiling for banks and other platforms. So let's say you're logging onto your BNZ or ANZ bank account in New Zealand at the office, and the phone rings and you step away from your phone. You've stayed logged into your banking details, and one of your colleagues decides to sort of jump on the laptop and see whether they're able to transfer a couple of $1,000s away from your account into theirs. What BioCatch does is it's not just looking at your credentials when you log in, but it's looking at your behavior once you're logged in consistently. So if someone new has jumped onto that laptop to try to move money, it's noticing that the way the mouse is moving, the way typing is happening looks unfamiliar and unusual, and it might run one of its tests. It has about 700 tests now that they're able to run, and one of them will be that your cursor will disappear. And the way that I will engage my cursor is going to be completely different to the way Simeon will engage his cursor. However, the way that I re-engage my cursor and do the squiggle to re-find the cursor, I do the same way every time, and Simeon does it the same way every time, because in a way, we're just organic robots, repeating the same behavior over and over again. And that is one of the tests that BioCatch will use to check whether the person that is, sending money is who they say they are. And if the test fails, you'll be blocked out of your laptop. So or not laptop, but out of your banking account. So really interesting business. Agritech is a huge one. Some of you may be very familiar with CropX. CropX actually was originally called Varigate. It was built as a partnership between New Zealand and Israel. It's a sensor platform that allows farmers to better monitor the water utilization in their fields. They're tracking along really beautifully. Tevel is a drone fruit harvesting business, so it can use its AI to identify fruit. Is it ripe? Is it ready for picking? Where is the fruit? And then it uses its arms to pick the fruit off the tree and drop it gently into a basket. Really amazing company. MedTech is a huge one. Site Diagnostics is a pinprick blood test that is able to identify a complete blood count test within 8 minutes at point of care. So imagine you arrive to a doctor's surgery before you go in and see the doctor, rather than them taking blood and ringing you a day or two later with the results and having to decide, do you need antibiotics because is it viral or bacterial? What could be wrong with you? They'll have rich data on which to make informed medical decisions in the room. So very cool company. Zebra is using artificial intelligence to give accurate diagnostics to X-rays, MRIs, and CT scans. Imagine a world where, God forbid, you've broken your foot, you go into a radiologist, you get a scan, and you find out immediately the result, and you don't have to wait for your doctor to hear the result from the radiologist, a day or two later. They've just uploaded their technology in all Canon X-ray machines, which are the fourth largest X-ray player by sales in the world. So some really interesting companies, some cool stuff around COVID. So, Sanitize, which is a nasal spray using nitric oxide that kills COVID in your mucosal region, most of it instantaneously, and then up to 95% by the end of 24 hours and 99% by the end of 72 hours. They've just run clinical trials in the UK and Canada and Israel. And Israel, really amazing company. Just finalizing the deck. Some of the exits our platform has experienced, we're not getting bought out by minnows. They're large multinationals, Samsung, Oracle, Intel, Nike, Snapchat buying our companies, and, some IPOs. And then just to give you a feel for some of the partners we're working with, largest banks and multinationals in their geographies. Really one of the last slides, just to share what I think is super cool about the business, that we're in. we're providing access to invest alongside, the biggest fund managers and strategics in the world. You're investing in deals on our platform and, through the OC50 fund, alongside, Jeff Bezos, Bill Gates. We've done, a handful of deals with both. We've done about 10 with Li Ka-shing, who's the wealthiest man in Asia, alongside Jack Ma, 1 or 2, Mark Cuban. These are big name investors. So investing globally alongside these names, I think, is super exciting. It complements what you'll be doing in, New Zealand and Australia, because, 99% of our deals are offshore, away from those geographies, alongside these investors. Lots of great names that we're partnering with again. And really, that is, what I wanted to move through to share, with those participants on this call.
Great. Thank you very much for that, Dan. That was a really useful oversight, and I think everyone on the video, either now or watching it as a recording, will really have taken something from that. So thank you. A couple of questions have come in. I'll just jump straight into them. Then we've got some others that we can cover off as well. First one is just on the class or asset class of blockchain and crypto assets. Interested if you have a view on that, or OurCrowd has a view on that you can share.
So we're much more focused on blockchain than crypto. I know there's been some significant overperformance in crypto. We think that's awesome for those that have had exposure to that. Good luck, and Godspeed. Hope that's a great performer for you. It's not what we have deep knowledge on. Our investment team are very experienced in the areas that I shared. Really experienced, or significantly focused on AI, optics, semiconductors, and SaaS businesses. That's really what we get as bread and butter. But drones and healthcare and those others, we have very strong capabilities in with our advisory and investment group. So we've looked at it, and we've got a blockchain specialist. We've touched on 1 or 2 deals in the space. We proceed with caution. Again, we think there's some interesting applications in blockchain, but crypto will not be something we'll be venturing into anytime soon.
Thanks, Dan. The couple of questions which are kind of correlated, so you can probably cover them off in one answer. But first one is, does OurCrowd support a secondary market for share sales? So let's assume we're talking about the OurCrowd 50 Series 4 fund here. And I guess coupled to that, how are returns distributed to investors, which you kind of answered, I think, earlier on, but maybe worthwhile just covering that off again.
Well, and I love the question, because I actually love the opportunity to slow down. I was very conscious to move through the slides quickly to get to Q&A, but it's a good, it's important to refocus on the way the fund works. So, we'll go out and raise, this strategy of fund, probably every 6 to 12 months. They've traditionally been oversubscribed funds. This is, no different. Simeon's really got, and Snowball have the last of the access into the fund. We've already moved into oversubscription, but there's an allocation that's been guaranteed to Snowball's platform. We go out, raise the capital, close the fund, start investing. Invest probably in a period of around 6 to 9 months, depending on the pace of our deals. And particularly follow-on deals that go into the fund. As each of those companies exits, so I mentioned that 6 have already materialized, 2 are announced, and we're now formalizing. As those returns become available, we make a distribution in full to the investor. So then they have a decision: do they want to invest, in our next opportunity, or do they want to, go off on a lovely holiday somewhere, or whatever application they have of those funds. So, for us, it's important to put that capital back in the investor's pocket. So, probably by mid this year, we'll be at that 33% or so DPI for Fund 1, meaning that if someone put in, $500,000, or I'll pick a round number, if someone's put in $300,000, they've got $100,000 of that original capital back. So that's super important. We like that recycling. We think that that is, a high performance, early returning sort of fund, and that's really important. In terms of secondaries, there's no sort of secondary market in the fund investment that's been made. So if someone invests, one needs to be sort of comfortable with the near, 10-year journey that one will be on. But again, importantly, we're in year 4 and returned, by that 4-year mark, about a third of the fund, meaning, expectation is by year, 6 or 7 or thereabouts, we'd like to have returned more or less everyone's original capital, and then the return will come in the subsequent 3 or 4 years to the 10-year end of fund life.
Thank you. Again, you did touch on it in the presentation, but is there anything more you want to add around the due diligence process that OurCrowd goes through, whether it's in the US or Israel or sort of between geographies?
Yeah, good important area to talk about. So we're pretty militant on due diligence. So I've, sitting in Sydney and ordinarily pre-COVID, I was over in New Zealand very regularly, and up in Asia about once a month, and, in the US and Israel, etc., a couple of times a year. But, I'd come across a number of really interesting companies that I'd be introducing, our platform to and my deal team to, and they've been a hell of a tough crowd. So, from my own experience, I've seen in action the challenges in getting deals up onto our platform. I think that's because we want to maintain the integrity of quality on the site, and also because, we're investing a significant amount of our own money in each deal. I mean, in the next, we've raised about $140 million in Q1 for investment, to complement the, the 2 or so billion I mentioned over the last, decade since inception. We'll probably raise about 600 million NZ bucks this year alone. Given we invest 5%, into our own deals, that's a very, significant amount of our own capital we're investing. So that provides a really strong protection, philosophically and practically to investors. So that's, I think, part of, the reason we're a tough crowd. Obviously, we want to be responsible and have very strong stewardship values on the way that we invest our clients' capital. We want to make sure we're investing things that are going to deliver a return and that we're proud of investing in. We've invested, by the way, in a lot of ESG deals. About 40% of our transactions are ESG related, impact type investments. So that's been a real winner for a lot of our clients as well. And the OC50 fund is no different. They're populated with a number of those deals. Our process around due diligence is, those 20 investment professionals going out reviewing lots of deals. They've got their own deal team committee, which looks at those opportunities and selects which they'll run deep due diligence on and which they'll put up subsequently to investment committee. The guy that runs that function, Ellie Neer, came out of the most sort of high-profile intelligence unit in Israel, which gives him high credentials in that semiconductor, AI, machine vision, optics, driverless car space. We've got his co-head is very notable figure in the healthcare space, having taken 5 of his own companies to exit. So Morris Last, a very, very significant player in that space out of the US. So, running that process internally, they'll then probably each year put something like, 50 to 75 companies up to investment committee. The investment committee includes 8 of our most senior members in the team, including our CEO, our president, who took Mobileye public. For those that aren't familiar with Mobileye, was a $15 billion acquisition by Intel in the driverless car space. If anyone's got a BMW or an Audi or a Volvo, etc., or a Toyota, they've got Mobileye built into their vehicle for modern cruise control, and it's what gives the vehicle eyes. So he took that company public. He's one of the most respected bankers going around. And we've got, you know, a number of other very significant practitioners sitting on that IC investment committee making decisions. You know, of those investments that go up to IC, as I mentioned, you know, 20 to 30 new deals a year will make it through, and then a bunch of follow-ons outside of those sort of 70 to 100 deals that they'll have a look at. And then there's also a veto type right, a reject veto right from my two co-founders. One is the CEO, John Medved, and one is a ex-Glencore, very senior member of their team, ran the aluminium division. So there's a real chronology of the way we look at deals, which, you know, we think gives us our high quality outcomes.
Thanks again, Dan. A few more questions are rolled in here. I'll pick up the first one, which is directed to Snowball Effect. So we're just asking, will Snowball Effect be running a secondary market? The answer is no, we won't be running a formal secondary market for the OC Series 4 fund. Just so people understand, when you invest, you're investing into Snowball nominees. Snowball nominees then picks up that aggregated investment and invests in the limited partnership fund. So there's a bunch of hoops that we need to jump through to make sure that we're compliant with OurCrowd's process. And obviously we're passing back communication and ultimately distributions to the underlying investors in that nominee. If people want to sell, we have to go through a process with OurCrowd to see if that can be approved. There's a whole bunch of AML and other compliance related things in doing that. We could possibly look at swapping out investments with people within the nominee already. But again, units aren't being repriced on an annual basis or anything like that. So it's not like a property fund where a price is presented or served back to people that hold the underlying on a regular basis. So you'd be really just looking to take your cash back as opposed to necessarily seeing any uplift from that. So I think for all intents and purposes, you should assume that there's no liquidity, as Dan sort of alluded to earlier, but you are looking, and certainly OurCrowd are wanting to deliver people their cash back as quickly as possible, and then sort of take upside from there. So hopefully that answers that question. Next question was just effectively in reinvesting in companies. So if the fund takes, let's just say it takes 12 months to deploy its cash, the first company, as an example, you've invested in that, it comes back for a second round. Would the fund reinvest in that same company? So it's sort of doubling down on a particular investment. Yeah.
Good question. This fund strategy is not a doubling down sort of follow-on fund. It's more focused on being like an index type product. So it's about diversity to have 50, separate companies. There are other funds which would deliver the strategy that was questioned. And, Simeon and I can have a chat about whether that, that opportunity, that particular fund could complement this fund. But at this point, the answer would be no. You're going to get 50 individual investments in different companies without follow-ons with this strategy.
Thanks, Dan. Next question is, how are Fund 2 and 3 going? How are they tracking versus Fund 1, which has obviously been the focus for the presentation, given it's the oldest?
Yep, that's right. So Fund 3 only closed late last year, so there's not going to be, or mid last year, sorry, still not going to be much worth looking at there. There's a couple of deals which have been written up, which is great, but I wouldn't suggest that that's going to be particularly indicative. Fund 2 is more, it's still a bit too young. It's sort of only it's only made its investments and been operating for about a year. So again, I think it's showing some good signs. The early IRR, which I'm certainly not going to get too excited about given its lifespan, is tracking in the direction we'd like it in. It's got some excellent portfolio companies which are performing really well, some overachieving, but because they're so young, it felt a little obtuse sharing both of those funds' details.
Thanks, Dan. Another thing you spoke about was just the agent stage that OurCrowd typically invests in. For people that have looked at the material that's on the Snowball Effect website, you can see the little charts which sort of show different series that the funds have invested in, whether it be kind of a Series A through sort of a Series D, CE, that kind of stage, or whether it's sort of more early stage convertible note rounds or seed rounds. In terms of the next 50 investments that this fund will be going into, obviously you can't predict exactly what that makeup will look like, but are you sort of still looking for a reasonably good spread between kind of seed stage, so I'm going to say kind of 50% of it or thereabouts sort of going seed stage, and quite a material amount going into those later stage VC type opportunities, some pre-IPO, that kind of thing?
Yeah. So really, it's a good clarification actually. What we'll find, or a good opportunity to dig deeper. What we'll find is Series A, B will be the lion's share. I'd say 50-60% of transactions, will be within that range. So that's really our sweet spot. You'll then get probably about 30% of the residual. Well, 30% of the whole, but the majority of what's left will be later stage. So, C, D, E all the way through. And then there'll be a handful, I'd say, of seed. There might be 2 or 3 seed deals out of the 50. It takes a special reason for us to invest in a seed deal on the platform. There really needs to be a very strong reason, either around the team being unmissable, the proposition being unmissable, them being very much first to market. We're more of a platform that focuses on having some traction, some revenues, a bit of a Series A, B traditional investor where there's a bit of a story there that we can hang our hat on, and it shows sort of market validation. So yeah, you'll really get the majority in that AB. The most of the rest will be later stage, and then a handful will be at that early stage. I should have mentioned on the earlier question, just because I'm an annoying lawyer and detail is everything. Fund 2, which I mentioned is Fund 2 of the OC50 strategy, which I mentioned is a bit too early to get excited about. I mean, the IRR last at the end of the Q4 was about 23, 24%. But again, I didn't really want to put that into the mix because it's just a bit too early to get excited about. But for the gentleman that asked the question, I thought it was worth highlighting.
Thanks, Dan. And sorry, I did misspeak before when I said about 50% of the fund going into seed stage. It's clearly not the case. But thanks for clarifying that. Just in terms of questions back on the screen here, sort of a follow-up question to the one around Fund 2 and Fund 3, just around deployment. I think you mentioned that Fund 3 had only recently fully deployed. Just confirming that the Fund 2 has fully deployed?
Yes.
Cool.
All totally deployed, and yep, Fund 4 raring to go. There'll be a couple of really interesting first investments that we're anticipating making into this fund actually. So we're excited to get it going.
All right, I was just about to start wrapping things up, but we've got another one pop through here. That's all good. All right, Dan, I don't know if there's anything else you want to say just in terms of wrapping up how this fund has gone in terms of raising the capital. I know there's been a really good response globally, and you've covered it off, I think, but if you want to add anything else, feel free to go for it.
Yeah, I think that really that's the key thematic. I'm sure that a lot of your participants on this have great access to, particularly through what you guys are doing, to domestic venture. I think we complement that with a bit of access to what's happening in a couple of those key offshore markets. Entry investment, ticket size, I think is very democratized. We're not talking about millions and millions of dollars, to get involved, which I think is important. We wanted this to be available to a much broader range of investor than historically in venture and tech investing. And we're looking forward to the opportunity to taking people on a journey with some of these companies, which we're anticipating getting great financial return out of, and making a difference. Being able to change people's lives in the healthcare space, and driverless cars, giving people back time to spend with family, and the rest of it. Semiconductors to make communication easier. We've seen the challenges around what COVID created. A lot of what we are investing in nothing is COVID proof, but I think there's been a lot of advantageous impact from COVID. Healthcare, digital health, remote health, telehealth, super strong, big thematic for us. Food and agri, big thematic for us. People can't live without health and eating, and vegan foods and laboratory meats and fish and milk grown without cows, cell-based milks, all of these very strong thematics moving into, the next 10, 20 years, we think are important and can really have a positive impact on humanity. So, would love to take care of anyone that this resonates with. And Simeon, thanks for the opportunity to sort of share the story with your community.
No, thanks very much, Dan. And just to wrap things up on our side, OurCrowd has generously decided to open up the fund or keep the fund open for at least another week. So at the moment it's open till the 8th of April, which is, I think, when everything will need to be wrapped up. We did have a pretty short window to promote this opportunity and obviously allow people some time to read through things carefully, make a decision. So thank you for the extra week. And as Dan, you mentioned, I think this is the only channel now that's open to get into the fund. So something for people to consider, something that's a bit different, and I think a really interesting way to consider getting exposure to some of these thematics and opportunities that Dan has taken us through. So thank you very much. If you've got any particular questions, people that are watching this, feel free to come directly to me with them, simeon@snowballeffect.co.nz. Feel free to just drop me an email and I'll get back to you as quickly as I can. But thanks again, guys, and look forward to moving ahead with this.
All the best. Bye, everybody. Bye, Simeon. Thanks again.
Cheers.